6th District Congressman Andy Barr is with us now. Andy, good morning.
Good morning, Jack.
How are you?
Doing great, thanks. How are you?
I'm doing fine. Well, it happened. Senator Jeff Sessions finally approved as our new Attorney General.
Yes, and that's a good thing, and we still have a delay on a number of these principal officers, these cabinet members, and historically that's unusual. Usually most of the cabinet secretaries in a new administration are confirmed at this point, so we still have some delays over in the Senate on that.
Now, we know, that you are the chairman of the Monetary Policy and Trade Subcommittee, responsible for overseeing the Federal Reserve, and the Federal Reserve Chair, Janet Yellen, is going to appear next Wednesday at 10 o'clock for the Fed's semi-annual monetary policy report to Congress. And tell us all about that.
Well, we want to focus our questions to the chair of the Federal Reserve on basically how wrong the Fed has been in their forecasting and underscore how ineffective the Fed's unconventional monetary policies have been. The state of the economy is still subpar. Our economy, the unemployment rate has come down over time, but that is not the only indicator of a strong labor market. The labor participation rate, which is really the more meaningful statistic, still shows that millions of able-bodied Americans are not in the labor force. And we believe that poor decisions at the Fed are part of the problem. This is the worst recovery in American history. There's still 15 million Americans who are unemployed 8 years after the financial crisis. So what we're going to focus on is why did the Fed predict a faster recovery after very unconventional monetary policies that included expanding the Fed's balance sheet to $4.5 trillion. In other words, what they call quantitative easing, which is a fancy economic term for very unconventional policies that increase the Fed's balance sheet for the purpose of holding interest rates at artificially low levels. Mm-hmm. That didn't work. The Fed's predictions were wrong. And so we want to encourage the Fed, based on these wrong predictions, to pursue a more conventional monetary policy, to shrink its balance sheet, and to focus on price stability, and that will create the landscape for more robust economic growth and better employment results.
What's the first step, to raise the rates?
Well, we're not in favor of necessarily, dramatically increasing interest rates. Low interest rates are good for some people. They're bad for savers. They're good for borrowers. The point is, we don't want a lack of predictability. We want certainty. We want more predictability because investors in the private sector are very confused by the Fed's policies, and they can't plan very well when there's a lack of predictability. So the point is, we want the Fed to go back to a more conventional policy where interest rates are more stable, where prices are more stable, and where there's more predictability.
Now, what effect would this have, if any, on inflation, in your opinion?
Well, normally, more economic growth means inflation moves up. But we've had low inflation because even though the Fed's policies have expanded the money supply, there hasn't been any velocity. That money hasn't been put to work. Yeah. And one of the reasons why it hasn't been put to work is because of Dodd-Frank, because banks aren't lending. And so that money is not being put out into the economy. So there's really, you've got pretty low inflation right now. So we do need to ask questions to the Fed that when the Congress and the President begin to roll back these regulations, when we reform the tax code and replace Obamacare, we're going to be injecting a lot of fiscal stimulus into the economy. And it's really important at that point to monitor inflation and make sure that we continue to have price stability and we don't have inflation, which of course decreases the purchasing power of the American people.
And we've a lot been misled by the unemployment rate. It's actually much worse than we've been led to believe that it is.
Well, it is, because, again, even though the unemployment rate has come down over time, there are millions of Americans who are able-bodied, they're working age, but they've completely stopped looking for work.
Yeah.
And part of that is our welfare policies. We're paying people to not work, but also part of it is just we need to strengthen productivity in this country. And there are policies involving regulatory relief, tax reform that can get the economy more productive, which will raise wages, which will encourage more people to go back looking for work. And so there's a lot of structural problems with our economy right now. We want to underscore this in our hearing, and we want to use that hearing to highlight support for some of the growth-oriented policies of the incoming administration and the Congress.
Congressman Andy Barr, thank you very much for being with us.
Thanks so much, Jack.